get to a consumer alert now. The government shutdown forcing the Federal Reserve to make its latest interest rate decision without a key piece of data. Karen Caifa is live with us with a look at what today's announcement, Karen, means for our wallets.
Hi, Annie. Federal Reserve Chairman Jerome Powell described today's move by the Fed as risk management. The Federal Reserve cutting interest rates by 1/4 percentage point. They had fresh government inflation data to help inform that decision, but they were working without government jobs data.
The Federal Reserve making its latest decision on interest rates without the full picture of how the U.S. economy is faring.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate.
The ongoing federal government shutdown has suspended most of the economic data the Fed relies on. That includes the Labor Department's jobs report for September, which should have released October 3rd.
It's not to say that we don't know what's happening with the U.S. economy right now, but we would have a much better idea and a higher degree of confidence if the federal government were operating and releasing the data that we're accustomed to getting.
The Fed can lean on employment data from the private sector as well as its regional banks. And while government inflation data for September did release last Friday, Bankrate's Mark Hamrick says the labor market is really in the Fed's focus.
Inflation is rising at an annual rate of 3%. That's still a long way away from the Fed's 2% target. But the Fed is primarily concerned now about a job market which has essentially frozen.
Justin Wolfers, professor of economics and public policy at the University of Michigan, says the central bank will likely take upcoming rate cuts with caution.
What it's doing right now is actually just taking its foot off that brake and moving us back to neutral. We'll coast for a little while until we can figure out what the next step needs to be.
Meaning, economists say, consumer relief on mortgages, auto loans, and credit card debt will come slowly, too.
And Powell said it was a pretty robust discussion among the members of the committee about what move the central bank should take next. And that's why he says a December rate cut is far from a foregone conclusion. The Fed will have to weigh a number of variables in the coming weeks, including the impact of the government shutdown, which Powell said weighs on the economy as long as it continues. Annie?
Oh, certainly. And also, with so much uncertainty, what other insights, Karen, did the Fed offer into where they think the economy is headed?
Well, the Fed still sees inflation as elevated, a little bit higher than where they would like to see it. That last set of government data showed it at 3% year over year. The Fed's target rate, of course, 2%. But of course, most people are looking at the job market right now. And Powell says that is an area that is softening. He said that in their survey of the data they did have available to them, it doesn't look like there'll be any kind of spike in unemployment anytime soon. But it does remain a frustrating market for job seekers. It is low fire, but it's also low hire. So if you're somebody who is trying to get into the labor market or trying to switch jobs right now, it is difficult. And that is something the Fed will be weighing as they go into that December meeting, trying to gauge as best they can whether this is just a softening labor market or one that's about to really decline.
Right. Okay. Karen Caifa, good insight. Thank you so much. Still ahead, ever feel